Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday, the 8th of July. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Donald Trump announces new tariff rates for more than a dozen trading partners, but suggests he's open to more negotiation.
The British government says it will ban non-disclosure agreements that are used to silence victims of misconduct.
Plus, why a once unimaginable sale or breakup of the Schroder family's 220-year-old City of London firm seems more and more feasible to onlookers.
Let's start with a roundup of our top stories.
US President Donald Trump has unveiled letters that threaten to impose higher tariff rates on key trading partners, but also suggested he was open to further negotiations. Trump began the notifications by announcing his intent to impose 25% levies on goods from Japan and South Korea. A dozen more followed throughout the afternoon on Monday, outlining plans to tariff foreign goods from the likes of South Africa, Indonesia, Thailand and Cambodia. However, in a move reminiscent of previous delays, the US president also teased the possibility of further talks.
I would say firm, but not 100% firm. If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now.
Trump spoke shortly after signing an executive order that delays the new tariff rates from July 9th until the 1st of August for all countries facing a so-called reciprocal tariff. The move effectively buys countries an extra 3 weeks to cut a deal with the White House.
The European Union is seeking to conclude a preliminary trade deal with the US this week. The bloc is hoping to lock in a 10% tariff rate beyond the 1st of August deadline as it negotiates a permanent agreement with the White House. Now, if no deal can be done by that date, tariffs on nearly all EU exports to the US would jump to 50%. Portuguese Finance Minister Joaquim Miranda Sarmento says that he's hopeful a deal can be done.
We do expect that at the end it's possible to have an agreement with very low tariffs, an agreement that could be perceived as beneficial for both parts and that could continue to allow us to trade and to increase value for our citizens.
Joaquim Miranda Sarmento speaking there to Bloomberg. As sources tell us, the European Commission seeking an exemption from the 10% rate for certain key products, including aircraft parts and wine and spirits. Meanwhile, the UK says that it is working to secure a deal with the US to eliminate tariffs on British steel ahead of the Wednesday deadline when the US could raise tariffs to 50%.
Bulgaria could clear the final hurdle to become the 21st member of the euro area next year. European Union finance ministers are expected to sign off on the bid later today, the culmination of nearly 2 decades of work by the country towards adopting the single currency. Bulgaria would be the second country to adopt the euro in the past decade and one of only a handful to do so since the euro crisis threatened to bring down the currency's own.
Now, the number of people killed in Friday's devastating floods in Texas has continued to rise. At least 104 people have been confirmed dead as search and rescue teams continue to look for trapped survivors. The Texas Senator Ted Cruz gave an emotional press conference praising the bravery of those who helped others.
Last week, we were picking up our daughter from camp here in Hunt. There's still 10 girls and 1 counselor from Camp Mystic that are unaccounted for. And the pain and agony of not knowing your child's whereabouts, it's the worst thing imaginable.
Cruz also addressed people pointing to recent Trump budget cuts to weather forecasting staff, saying, quote, "This is not a time for partisan finger-pointing." Local, state and federal officials have faced criticism in the aftermath of the tragedy, including questions about why the flood-prone county lacked warning sirens.
President Trump says he'll ship more weapons to Ukraine in an apparent reversal after the Pentagon halted flows of some air defence missiles and artillery shells to the country. Trump didn't specify what the US would provide, except to say the armaments would be defence weapons primarily. The president's comments will offer a measure of relief to Ukraine's President Volodymyr Zelensky, who spoke with Trump on Friday in an effort to get the halt lifted.
Now, UK businesses are going to be banned from imposing non-disclosure agreements on victims of harassment and discrimination in the workplace. Deputy Prime Minister Angela Rayner announced the plans to add the ban onto the Employment Rights Bill, which is passing through Parliament. Bloomberg's James Woolcock has more now.
If you've signed an NDA to prevent you talking about harassment or discrimination in the workplace, the new rule would make that contract legally null and void. It crucially, though, would only apply to those allegations and not the standard use of NDAs to stop commercially sensitive information leaving a company. The bill is yet to pass, and the amendments could yet fail or be altered further, but it is in part a response to the years of high-profile sexual misconduct scandals in the City of London. In London, James Woolcock, Bloomberg Radio.
France's President Emmanuel Macron arrives in Britain today for the first state visit from a French leader since 2008. The 3-day trip is both a chance for the countries to forge new deals on migration, defence and investment, but also a sign of thawing relations after Brexit. Prime Minister Keir Starmer has talked up his administration improving relationships with European countries as a way to solve Britain's issues.
And those are some of our top stories for you this morning. Now, looking at the market, some element of reprieve with President Trump leaving the door open to additional trade talks. Few nations successfully negotiated trade deals in the very short term. But looking at the MSCI Asia Pacific Index, we're now up by 0.2%. You also had relief, at least for the understanding of what the tariffs will look like. In South Korea, the Kospi's up by 1.5%. The Nikkei 225 up by 0.3%. Looking at stock futures for Europe, they are down 0.1%. Europe's still negotiating a deal. S&P 500 E-minis are up this morning. Goldman Sachs' David Costin talking about a new target, higher target for the S&P 500, up 11% in 12 months' time is their view. Bloomberg Dollar Spot Index this morning is down 0.2%. The pound is up. The euro trades at 117.41, so also stronger, 0.3%. And then just looking at the bond markets this morning, 10-year US yields trading fairly flat at 4.39. That's a look at the markets.
Well, in a moment, we'll bring you up to date on the latest tariff news, plus the challenges facing the UK's largest standalone asset manager, Schroders. But another story that caught our eye this morning, in case you're in the market for a luxury home in the Cotswolds, you're not alone, apparently. Our Bloomberg Pursuits UK correspondent Sarah Rappaport has been writing about how this is peak house buying season. I loved this fact. Apparently, agents say that sellers won't let buyers visit until everything is in season. Sarah mentions the roses in her piece, and that the sun is shining, essentially, so they can showcase their properties in the most flattering light.
Yes, of course. This is, the fabulousness of English gardens. Yes, I can absolutely understand this.
Slightly less fabulous in pouring rain.
Yeah, but the weather's been lovely, very, very warm. And doesn't Sarah Rappaport have the best job ever? Apparently, the mix of buyers is also, I was interested to read, a little bit different. So yes, ultra wealthy British families from London. I mean, the Cotswolds is so beautiful and pretty quick to get to, actually, from the capital. But it's also about global tech and finance names and interestingly, that Americans want to put roots down. It's not just about second homes, which I thought was quite different.
I quite liked in some of the properties that Sarah visited as well. She identified some key trends for Cotswolds house shopping at the moment. Interestingly, the area that people are looking for, not the same as it was before. There was a big draw around Soho Farmhouse, which apparently is dwindling now. Everyone wants an outdoor bath and shower. And the Americans, as you say, coming and putting down roots. Yeah,
and the outdoor bath, you have to see the pictures to really get it. But yes, it's a beautiful copper outdoor bath. But it's related, of course, to kind of wild swimming and natural swimming pools, which is the other trend that I've noticed. But yeah, really nice piece anyway.
We'll put a link to it in our show notes for you. Let's bring you up to date on Donald Trump's tariffs, though. After the US president issued that first wave of letters with new rates he will apply now from the 1st of August. This, as we've learned more about the kind of deal the EU appears to be closing in on. Our EMEA News Director, Rosalind Matheson, is with us for more. Ros, good morning. The letters have gone out to around a dozen countries with their new tariff rates. Are these better or worse than what we'd expected?
Well, they seem to be largely in line with what people expected and in line with the earlier numbers. And so you did see that initial market reaction, of course, but then it has stabilised a bit and markets seem to have settled down. The interesting thing is that most of the countries on the initial letters list, at least, if there are more to come potentially were in Asia. So you had this 25% levy on Japan and South Korea, notably two significant trading partners with the US. And Japan, of course, as we know, has been tricky in terms of getting a deal with the US for a variety of reasons, including the domestic political climate in Japan ahead of some elections soon, but also hitting a lot of smaller states in Asia, including Cambodia, Myanmar, another one that got impacted, but also Indonesia and Thailand. So a real sense in this, at least, that he was training his eye very much on Asia with these initial deals, largely in line, as I said, with the figures, but the message seems to be, above all, that they're trying to stop transshipment of goods from China through these countries and onto the US. So they're hoping to pressure these Asian countries to crack down on that with these rates.
Yeah, it was interesting that such small trading partners were sort of top of the list. But then President Trump also says that there is this new 1st of August deadline, but it's not 100% firm. That does also leave the door open, therefore, to more negotiation. Where are the deals looking most likely now?
Well, yes, with Donald Trump, nothing is final until it's really final and absolutely final. And so it seems that there is some wiggle room still here by pushing off these increased duties until at least the 1st of August. And so saying that he's open to conversation. We know that there's been quite a lot of push to get a deal with India, for example, and there's no word for now, obviously, on a rate for them. We don't know if that will come this week, but that's a country that's very much in watch. Obviously, we're also expecting a deal potentially very soon with the European Union, which also has not got a rate in the latest letters. The question is, can countries like Japan and Korea navigate their way with the US? And South Africa, also a notable country that got a letter yesterday. But again, these are significant trading partners where sectors like for Japan, rice and autos are particularly fraught. You've got a new administration in South Korea that has to tread carefully given the domestic mood in the country. And so they probably want to get a deal and they're going to keep negotiating. We know Japan had their negotiator there day after day trying to make some headway. So you'd want to watch India, obviously the EU, but also Japan and South Korea in this.
Well, just on the point about the EU, we've been learning a little bit more about what kind of interim arrangement the EU is aiming for, a 10% baseline tariff with some key exclusions. What more can you tell us about that?
Well, that's right. And it's largely in line with our own reporting from a week or so ago, which showed that the EU was prepared to swallow that 10% universal tariff in a way, but also seeking a number of exemptions within that 10% rate, and that particularly for aircraft and aircraft parts, as well as alcohol, wine and spirits, and that it wanted those carve-outs from the 10% rate in order to agree to the deal. But it was getting a lot of pressure, we know, the EU from key lobby groups within the bloc just to get a deal done and to ward off a broader trade war with the US. And so that's largely in line with what we've been expecting for the EU, that we'll get this kicked down the road as well, and it will avoid that 50% tariff. But the question is two specific sectors which seem to be particularly fraught, and that's getting the 25% tariff on automobiles and car parts lowered, and it's 50% tariff on steel and aluminium. So those are two key areas for the EU that they're trying to get traction on. But from what we can understand, it doesn't seem as though there's a lot of progress there. So they might get this interim broad framework, which is just essentially to buy themselves some more time to negotiate on those other areas.
Yeah, indeed. And the UK also trying to negotiate and avoid an increase in steel tariffs that may come also. So, as you say, still lots of negotiations to come. Ros, thank you so much for being with us this morning. Our EMEA News Director, Rosalind Matheson.
Well, in the UK, the future of the country's largest standalone asset manager, Schroders, is in focus. The Schroder family sold its investment bank to Citi 25 years ago, but now many observers are saying they have tough decisions to make about the pure fund manager. Our finance reporter Leo Kensherper has written today's Bloomberg Big Take about this story, and he joins us now. Leo, good morning. What are the challenges then that Schroders is facing?
Yes, good morning, Stephen. So essentially, Schroders faces the same or very similar challenges that many traditional active asset managers are facing. When you look at their classic mutual funds business, costs are rising and revenue is going down because investors switch to cheaper, passively managed funds. And that leads, of course, to margin compression. Schroders also has a private markets business, which consists of various units that Schroders has acquired over the years, a Swiss private equity firm, a renewable infrastructure manager, these kinds of businesses. But overall, these firms aren't moving the needle enough for Schroders as a whole. And the unit also has missed fundraising targets over the past years. Now, what adds to the pressure for Schroders is that they're not entirely owned by the family. The family owns 44% and the rest is publicly listed. So the share price, which has now dropped, really puts pressure on them. The share price has dropped more than 40% from its peak in 2021. So you can tell that investors' patience is definitely wearing thin here.
Yeah, absolutely. I mean, it's such a huge kind of passive market right now, isn't it? But who has been really talking about this idea that the Schroder family might sell up? What have you learned?
Yes, that's a good question. So it's a very wide range of city figures. You've got investment bankers and management consultants who are following the space, of course, very closely. You've got analysts like Panmure Liberum who have, very openly said they're not sure any longer in their conviction that the family would never sell. You also have people who know the company or the family who say, look, you've had two patriarchs, Bruno Schroder and George Mallinckrodt, who were the main figures at the company for decades. They both died in 2019 and 2021. And now there are 6 people who probably make up the family's senior generation. And this, according to the people who know them, likely leads to a more diverse range of views about what the right strategy is for Schroders. And any deliberations could include the option of a sale.
What has the family said about this, if anything?
Yeah, the family didn't give us a fresh statement, but they pointed to Schroders' annual report, which says that Schroders' so-called principal shareholder group, which essentially consists of the trusts tied to the family, are supportive long-term shareholders and intend to retain a substantial shareholding in the company over the long term. So that message was in Schroders' latest annual report. There's no change here.
So then what do you think the options might be that are open then if there were a sale maybe considered?
Yeah, beyond an outright sale, there are various ideas floating around in the city. So one is from Deutsche Bank mainly. Deutsche Bank analysts have said, Schroders could really sell the asset management business and focus on wealth management. Schroders bought Cazenove Capital, which caters, as you can imagine, to high net worth individuals. They bought that business in 2013, and that business is now widely considered Schroders' crown jewel because it attracts a lot of client money and is very profitable. Another option would be to emulate the Rothschilds, another great European banking dynasty, and take the business private. But people close to the family have told me, the Schroders are unlikely to do this, partly because they're very proud of their London listing. And then a final option, which has been explored by the previous CEO, Peter Harrison, a few years ago, would be to double down on active fund management and buy a rival. Peter Harrison, a few years ago, explored buying M&G, a crosstown rival, which is very strong in fixed income, but then decided to abandon that plan because it would cost too much. And now, with Schroders' own valuation down so much, it's hard to see that stance changing.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.